Hey everyone, I'm going to go over an email I got. Feel free to email Deanna and she'll send it over on Slack. I started typing it and I said, why don't I just make a video? So Sabrina sent in an email. We'll keep her last name for privacy, a little blurred out. Can Lance explain why he is so bullish on Snap and so bearish on Reddit against majority opinion? Ooh, are the Reddit traders saying, are they saying bad things about Snapchat or good things about Reddit? Maybe. Sounds good. But let's break it down, shall we? Because I don't go on Reddit and stuff, but you might be saying, look how good this chart of Reddit is. Why are we going against it, basically? So let's go dive into the details on Reddit. So I just have a blank chart here. It's a blank daily chart. Nothing too fancy here. Just want to look at it from a clean perspective, so to speak. Try not to get opinion, any bias, all that jazz. Well, we only have 2 earnings reports. Let's get that yellow from Reddit since it's been a public company. So you can see this earnings, the stock really did nothing. Yeah, I mean, not much, right? Again, Reddit, let's say maybe a small gap lower, let's just say 10%, which is not a lot for Reddit. This earnings looks like we had about a 10% plus pop. So we're 50-50, about a 10% implied move. Let's go ahead and look what the market makers probably expecting on Reddit. You know what we can do actually is get the free earnings indicator. So this is completely free. Maybe they'll post a link in the description below, or just again send an email and we'll get it to you. It gives us the market makers range, but we don't have it yet because it just hit me. We don't have the Reddit November 1st expiration. It will only show us the earnings that are the upcoming week. So today, the next week is October 25th. November 1st expiration is a little too far away. So why I think Reddit has some downside pressure is today we saw some 75 put buyers in the November 1st expiration. These are for next week. They don't capture earnings, so we could kind of discord them. And then we did see on October 15th, the November 1st 73 puts. Now, puts, remember, can always be a hedge against a long stock position, especially out the money puts. And on Reddit, to be fair, because we want to, again, look at it completely from a non-bias, we have seen since they bought the puts in Reddit from October 15th, look what happened to the stock. It has gone higher. So has the market, to be fair. Today it was high. Now it's about $1.50 off the highs from this put buyer. But again, it could be a hedge against a long stock position, or it just get downright directional with Reddit. I don't have too much of an opinion on Reddit because the options are a little juiced up. Therefore, the risk versus reward isn't that favorable. What I did for Reddit, I just bought 2 contracts, so nothing crazy. So that's about, let's say, $700 of risk. Now let's get to Snapchat to answer Sabrina's last part of the question. So again, we don't have Snap earnings till I believe the 29th, so the November 1st expiration, we'll get it. So the earnings indicator is not going to give us anything there. It will only show earnings that week, or I believe the following week as well. Actually, let me just show y'all, giving you a little example. And again, completely free. Don't pay for it or anything. You can see Netflix, the implied move is about $50, right? Bull price target $745, bear price target $644. So about $50 implied move, which is insane, quite frankly. I think you got to be crazy to trade expensive options like that. What I like doing, and I just posted this in the option pit, is some Disney October 97 calls. They hit the penny option scanner. So, they were like 50 cents. I think they were 37 cents when they hit, now 50 cents. Just a cheaper alternative. So you always want cheaper options for earnings. But let's go back to Snap to answer Sabrina's question. This is why I make videos and I don't type. Could you imagine me trying to type all this? All right, so let's go to Snap. So we see Snap, horrible chart. Worst chart ever. You can even argue. Markets at highs, Snapchat, near lows. But what we do have with Snapchat is gaps. So gap, 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 right? So unlike Reddit, where we weren't getting too much movement in the stock on earnings, again, we only had 2 prior quarters since it's been public. Snap, we have a big history with. It is a huge gapper. I mean, you're talking 17 to 12, from 11 to 14, from 13 and change to 10. I mean, we're having like 30% moves in Snapchat. And this quarter, the market makers, we'll take a look at it here, but even if we go back in history a little bit, you can see Snap. Let's do this. Let's do our time frame. We'll do days. We'll go to 3 years. You can see from the history, I mean, this little Snapchat, take a picture, erase it. Hopefully it's not too naughty. I remember when I had a Snapchat. I feel like an old man saying that. I think it's popular with the youth. I don't really know. I don't do too much fundamentals, right? But you can see it has a history. I mean, going back for a couple years of gapping, right? Look at all these gaps, okay? So what I have in Snap is a gap fill. Remember, 80% of gaps get filled. So a gap fill will be 1270. So let's just write that real big somewhere. 1270. We could put 13 to make it easy math. Let's just say $13 a share for easy math. That's a gap fill to the upside. Gap fill to the downside, I guess you would do, shoot, $8, $9. I mean, you take out this prior low, look out. So if you're bearish, you're wanting Snapchat to crash on earnings and take out the prior low, which would be about $8.30, just say $8. So let's look what the market makers are implying for Snap to report on earnings. We could go ahead and find this. Should be right here. Yeah, it is. So we're looking for about a $2.50 move on earnings. That will only increase as earnings get closer. So we had, what was it, 1270 as a bull price target. Let's just add 250 to the current share price on Snapchat. And remember, we did have about 200 and let me pull it up here. 270 dimes, 1,000 of the Snap, 265 of the Snap November 1st 11.5 calls. Hence, you can see my book right there, and you can see I'm down $839. So we still have those, and they appeared yesterday to add. I believe we had 3,000 total added to open interest yesterday. But let's just pull it up here. Big easy. Yeah, there we did. Yesterday we had the 11.5 calls. 2 orders add, only about 140,000, give or take. I know it's not a ton of money, but something. Today we had some puts. That was part of a ratio spread, which usually is not directional. I'll explain that in another video sometime. But they did a diagonal ratio spread where they sold the 8 puts and bought 1/2 the times of the 10 puts. So basically they bought the 10 puts and sold the 8 puts double the size. So we call that a ratio spread. But anyway, let's just do the math on Snap. So we have a $2.50 implied move to the current share price. Let's just say 10.5. 10 plus 250, or 10.5, pardon me. 10.5 plus 250. That gives us what? 13 a share. 13 a share lines up right here with that gap fill. Okay, so let's say we get, hypothetically, of course, maybe the big disclaimer, all the disclaimers, you know, when you put money or talk about stocks, investing, don't risk more. You can afford to lose. There is a risk involved. You know, all that jazz, right? This is not investment advice. This is pure trading analysis. But let's just say 13, our bull price target. Bear price target would be what? 10.5 minus 250, $8. So pretty much lines up to what we were saying, right? Exactly. But let's just say, hypothetically, we have the 11.5 strike calls for November 1st. Okay? And they are about 80 cents at the moment. So just to say 80 cents, see my trade price is 86 cents. We'll just say 80 cents for easy math. Let's say the stock goes to 13 per share on earnings. So we'll do 13 per share. We have the 11.5 strike calls. That gives us what? 50 cents. We get to 12. Right about let's just say $1.50. Okay, that would give us about $1.50. So 12, yeah, about $1.50. Okay, so if the calls go from 80 cents to in the money at $1.50, that gives us a double. Now, a double, it's good, but it's not great. So when you're trading earnings, you usually want to risk 1 to make 3. That's your kind of your minimum risk versus reward. Not 1 to make 1. So you don't want to risk, let's say, a 50-50 shot, right? That's crazy. You never do that for earnings, because earnings, again, you're playing a directional play and you need to get it right. What you're looking for is what we call a greater than expected market maker's move. So let's say we get $2.13 a share. The calls go to 150. That's about double. So 160 would be a double completely. But let's say we get a greater than expected market maker's move. Now we're really going to aim for the fences here. And let's say we get 14 a share. Okay, so we're going to do 14 a share minus 11.50, the strike price that we have. And of course, we do have to take in consideration the premium we have, the premium that we are paying for the calls, which is about 80 cents at the moment, right? So now we're going to get to 50 cents, 250, okay? So we're looking for a greater than expected market maker's move, or maybe we just start getting a rally between now and the earnings event. So now calls go from 80 cents to 250, boom, that's 3x. That's the kind of setup I'm looking for when I'm trading earnings. And of course, this is a lower price stock. You could always have possible news. In the meantime, if we look at the short interest, you may be saying, Lance, how is the stock going to rally so much? Well, it does have a pretty high short interest. I think it used to be higher. It's about 7% at the moment. Let's see if, I used to like this website, shortsqueeze.com. I think you have to pay for it now, though. You do. So let's just say 7% short interest. You can get some squeeze on that. To give you an example, let's say like Tesla, another highly shorted stock, has about, 2.5. Let's look at some other social media stocks. Facebook, 1.5, nothing. Pinterest, 3.5. So Snap does have a pretty high short float. Another highly shorted stock, obviously GameStop, only 9.8%. Good Lord. Shorts have had to cover, huh? Chewy, 11%. So it can get that momentum. It's up there in the high short interest. High short interest, you have a short squeeze. I mean, 13's not out the question. 14, I don't think it's out the question. Remember, last quarter or 2 quarters ago when we had a gap, I mean, we were pretty much right here, right? About 1170, and we had a gap up to what? 14, almost 15 that day. The risk versus reward is there. We have some call buying. Obviously, I'd love to see more call buying in Snapchat. I want to see more in the money, deep input buying in Reddit. But hope that helps and kind of give you the mindset. Also, it's just a contrarian point of view. Usually stocks that are beat down towards the end of the year do have a short covering rally. You kind of saw that in small caps right now with the ahead of the election stuff, very interest rate sensitive. Interest rates go lower, and then tax code. Small caps have been, not doing much all year, and then they had a pretty big rally, mostly short covering rally. Small caps are usually more highly shorted stocks than, let's say, large caps, which are more slow, steady moving. So I hope the video helps. Let me know if you have an email and want me to make a video. Email I don't know if Deanna will post the email link there, and then she'll send it to me, and instead of typing, we'll just do a video.